Lockheed Martin, stock ticker symbol LMT, and this is educational purposes only, of course, not financial advice. We discussed Northrop Grumman last time, so I thought it would be good to look at someone else in the same sector, kind of compare and contrast. And so if we look at their sales for last quarter, last year that is, it was 15.6 billion, and now we're up to 16.2 billion. So that is a $600 million increase. And yet, in terms of their profits, you can see over here, they're both around 2 billion, but technically it's about $90 million increase. So it's very similar to Northrop Grumman, this idea of, having a $600 million increase in revenue, and yet only a 90 million, a very small percentage of that actually increasing profit. So these companies, both of them, seem to have very low operating or profit margin. So not a great sign. But on the bright side, it's obviously not just a Northrop Grumman problem or just a Lockheed Martin problem. Maybe it's more of, this area, this sector. Nevertheless, interesting thing about Lockheed Martin is they are buying a company called Aerojet Rocketdyne, and kind of like the name implies, especially with the word rocket in there, they make rocket engines as part of their business. And so this seems to me like Lockheed Martin is expanding into the space area, which is really good. So is Northrop Grumman. A lot better profit margin for Northrop Grumman there compared to its other sectors. Maybe Lockheed Martin will have a similar situation. They have to buy it for around $4.6 billion. And assuming that money is not set aside, they have $3 billion of cash and cash equivalents on hand. So, this is something that's easy, I suppose, for them to purchase. They probably have to get another $1.6 billion roughly in terms of debt. Probably not a big deal for them. And they'll probably have to get a little bit more because I don't know exactly what they're going to be selling, and how much money are they going to have from their cash flow, and how much do they want to save and use, and all these different questions, because obviously they pay dividends, so they have to worry about that as well. So they might be borrowing more than 1.6 billion, and we'll talk about their debt in a little bit, but just something to keep aware of. In terms of Aerojet Rocketdyne, well, for the XS-1 spacecraft, or also known as the Phantom Express, they use an Aerojet Rocketdyne engine. That's Boeing, and so that's really nice. This is not a company that's going away. They're kind of at the cutting edge, so that is a really good sign. They also are involved in the X3 ion thruster. So these are all things in development in terms of a totally different way of propulsion in space. Very neat. And they also are involved in the multi-mission radioisotope thermoelectric generator, which is pretty neat, actually. I don't really research this, and this is obviously not my field, but I think it uses, as far as I understood, nuclear technology to pretty much heat and generate electricity for things like the Mars rover, the Mars Curiosity rover. So this is a really nice thing. This is something that obviously has not only been trusted by NASA, but has worked and has been successful. So that's a really good sign, I think, for this company that Lockheed Martin is buying, and obviously it's going to help them expand into the space area. They are already involved, and this is just, I wouldn't say cements, but it just helps progress them in that area. So really positive sign in that front from Lockheed Martin. Also, in terms of their contract assets, which are revenue recognized, which exceeds the amounts billed to the customer. So pretty much, their contract pretty much says they should be getting a certain amount of money, even though they haven't gotten that money yet because they've fulfilled certain requirements. And from last year was $9.5 billion. Now we're up to $10.9 billion. So almost a $1.5 billion increase, which is nice. That means that there's a lot more money in theory that should be coming into Lockheed Martin in the coming years or so once they get paid by their clients, which is mostly the U.S. government. So I don't see any problems there. And also their contract liabilities, so how much they're paying for things, for example, those have gone down, so that's a nice thing. And their revenue recognized of in excess, right? That's why it goes down, because they have more revenue than they had to pay for, these contracts. So once again, a really positive sign. Now, some of the negatives. Okay, let's buckle up, because there's not just one or two. Legal proceedings. This is not something that I felt Northrop Grumman had a problem with, but I do feel like Lockheed Martin has quite a few sore spots. So they bought Sikorsky Aircraft Corporation, right? They make the helicopters, things like that. Now, they also assumed any problems for potential liability for 2 Civil False Claim Act lawsuits, and they were involved with the U.S. government in 2014. These 2 cases were consolidated into one, so that makes it a little bit easier to manage and fewer problems, I suppose, for the company trying to fight on multiple fronts. They had another issue, as far as I understood, that, or at least it's part of this, is that the SSSI, that is the Sikorsky Support Services Incorporated, pretty much overbuilt the Navy. They charged the Navy too much. What did they do? They pretty much inaccurate cost pricing, so pretty much fraud. I guess at the end of the day, there was a company called Derco that makes parts that the SSSI was buying from, and pretty much, let's just say, they're going to mention soon, it was highly favorable pricing for Derco, and so Derco was getting a lot of money from SSSI, from the government, because the government would have to pay for all of those parts, and there was some anti-kickback issues, because there would be, for example, a monthly chargeback of certain SSI employees being billed to Derco. So it's kind of a quid pro quo, and, obviously does not look good. Now, the government did dismiss the Anti-Kickback Act and dismissed Sima, which was one of the personnel, if you look back up here in the first paragraph. Peter Sima was one of these former Sikorsky Support Services employees. I guess he was involved in lawsuits, so he has been dismissed as a party to the litigation. I don't know exactly what that means. I don't know if that means that case was dismissed, but maybe his enrollment or his involvement or ability to get some sort of money from it, maybe that was dismissed, or maybe it's dismissed from one side of the case. I'm not entirely sure. Not such a big deal, but there's obviously some positives for Sikorsky, is my point. And it's $52 million, so not a lot of money, especially when we were talking about what we just had been mentioning, these huge, massive amounts of revenue. Nevertheless, I think my problem with this is it tarnishes the look of Sikorsky and also that of Lockheed Martin kind of by association, because when these things are all finalized, it's going to be Lockheed Martin owns them. It's going to be, is there going to be enough branding differentiation that people look at Sikorsky, if there's something negative, they look at Sikorsky as, cheating them? Or no? Is this also going to be part of, affect Lockheed Martin as part of that company? I don't know. But it's not something that's great when your biggest client feels like they've been cheated. Now, there was another issue when it comes to Lockheed Martin agreed to pay pretty much $6 million. And this was also an anti-kickback act. That was dismissed. However, there was a False Claims Act, I suppose, mischarging. And this is once again with the U.S. Department of Justice that was settled. I don't know exactly all the parties, but, Lockheed Martin's not admitting any fault. And this is not part of Lockheed Martin anymore that had the lawsuit, but they did still have any liabilities when they sold this section, the Information Systems and Global Solutions. When they sold that section and that sector, they had to keep all of the liabilities. So once again, technically, maybe right now not part of Lockheed Martin, but it doesn't look good. I don't think it looks good. I don't know how the government looks at this. The people being cheated maybe are different people than are making the decisions, and they have different opinions, and maybe this has no effect. But I have a feeling like with all these lawsuits, if they just keep happening, it tarnishes the whole look of Lockheed Martin, right? They also, this is a much smaller issue, I think, but nevertheless, worth mentioning. The MTA, which is the New York Metropolitan Transportation Authority, pretty much blocked Lockheed Martin from doing their work at their excess site. They were being paid by the MTA to do something, and they weren't allowed to. And pretty much the MTA said, well, that's because you breached the contract, and the contract was $323 million, of which Lockheed Martin already did $241 million worth of work. So we're only talking about $190 million, compared to revenue. Not a big deal, but like I said, it just doesn't look good. Now, the court did kind of decide that the MTA's termination of the contract was improper. And once again, this has to do with their former sector. But, they are still assume responsibility, Lockheed Martin, in the sale. And so this kind of will, I think, affect Lockheed Martin, especially in the news, when it says Lockheed Martin has to pay this out, possibly. Or possibly not. Maybe they'll win. I don't know. But to me, it's, there's a lot of legal things going on. Northrop Grumman didn't have that problem. Now, Northrop Grumman did sell an information technology sector, and maybe they tried to, they saw what Lockheed Martin was going through, and they thought, we don't want to be involved in all these claims of the government going after, kickbacks and, false claim acts in terms of mispricing. So maybe they just tried to dodge the bullet, and we'll see if they're successful or not. But obviously, Lockheed Martin has quite a few lawsuits, so to me, not a great sign. In terms of environmental matters, this to me was a little bit scary. They mentioned that they're going to include all of these costs in future net sales and cost of sales. And so they're going to pretty much, I wouldn't say sweep it under the rug, but they're going to slowly pay this off. It's not going to be one massive bill, but nevertheless, it's going to affect operating margin in future years. And it's going to be a little bit confusing in unless they're really good at outlining exactly how this happens, which some companies do, but I didn't see anything as of yet that was too clear. So, they mentioned that they have 778 million and 790 million, 89 million, in terms of liabilities when it's gonna, cleaning up these environmental sides. I don't know why those two numbers are so similar, but it looks like to me, we're talking about almost $1.5 billion of environmental cleanup. And over 20 years, they're gonna kind of sweep that into that cost of sales and things like that. I don't know if that's a good thing or not, personally. There's no massive, if you're already a stock owner, that's a good thing. If you're not a stock buyer yet, well, do you want to be involved in a company that's going to look like they're not doing so well because they have all these past environmental issues? Now, there are some positives. The federal government, at least I presume under Trump, decided not to regulate perchlorate in drinking water. Well, obviously, that's an issue for Lockheed Martin. And will the EPA under Biden change their mind on that, right? Will they be a little bit more, similar to California, which is having a problem with this, and which Lockheed Martin has to fix for that issue. And they don't know about potential future remediation, right? They're making no claims about that. And so that's a little bit, that's not great. And Northrop Grumman also had these problems, but I don't remember it being in this type of dollar range. Now, if there's lower standards, meaning a lower amount is allowed of perchlorate in California, or hexavalent chromium, I have no idea these chemicals. Okay, nevertheless, it's going to materially increase the estimates for Lockheed Martin, which makes sense, And I'm not even going to bother pronouncing this one, but PFAs. They might be only allowed to have extremely low concentrations in drinking water, and so that's obviously going to increase the cleanup site costs of what they already have to clean up. So to me, not a great sign. Now, obviously, that's part of doing business in a really advanced area, really advanced machining, right? Northrop Grumman also had these kinds of issues, I suppose. So I'm not saying that you can invest in any type of company in this sector and avoid them, but nevertheless, these are clear issues that Lockheed Martin has in spades, it looks like. 1.5 billion over 20 years doesn't sound like a lot, but that number possibly going to keep going up, and it's just going to look bad, for Lockheed Martin. And will they have to pay that off sooner? I don't know exactly. Yeah, this part makes me a little nervous, just because who knows what's going to happen, and who knows how much that number is going to increase as time goes on. Right? Because these are new technologies and new chemicals that they possibly need to use, and so we might find more and more issues. Now, another negative, although not such a big deal, ground-based radar, they had some contracts that were losing $250 million on them. I guess the costs were just more than they were making, and, it stayed, I guess, around that number, which I suppose is a positive. And same thing with the Air Missile Defense Command. They lost $260 million, still at that number. And also they had a turret that they were upgrading and designing, and they were told to suspend work on that. So that's part of the problems, I suppose, of, being in this type of business, is that we discussed with Northrop Grumman. There were certain things that the government said, we'll pay you this amount, you have to deliver, and if, costs go beyond that price tag, that's your own problem. You have to figure out your way around that. And obviously Lockheed Martin or Northrop Grumman, signs a contract because they want the deal, and the government wants to know there's a specific price. And if Lockheed Martin makes money on that, great. And if they don't, that's their problem. That's part of the, that's just part of the way the government does business. Now, that's not the only way. Sometimes they involve, that the government will pay for cost of goods. And, so we saw in Northrop Grumman, it was kind of a 50-50 split. And they tried to focus those things that were, things they knew they could get under a certain price. They were willing to go for that specific, just a sticker price, and they'll give you the price of the government, and whatever happens, versus, the other 50% where it was a lot more research and things were changing, and, maybe they were, they weren't so accustomed to exact costs. they were going to involve the cost of goods, so the government would have to pay for those if those went up. So, that is something that I suppose these areas, maybe that was the issue, or maybe it was because they had timing, delivery, penalties. I don't know exactly what the issue was, but it's part and parcel, I suppose, of the industry, and Lockheed Martin has a few problems, a few programs that are, problematic, I suppose. Not the biggest deal, but still not a great sign, I think. Now, this is a great sign. Their post-retirement benefit plans, we're talking about $330 million for the quarter, so about $1.2 billion, which, if I recall, Northrop Grumman, which is, we'll see later, a smaller company, I don't know about employees, whether they're smaller, but in terms of if you wanted to buy the company, it would cost less. They have a much bigger retirement issue, post-retirement benefit plans, those types of things. And so, what they're paying into their pensions, is so much more. I think it was 1.8 billion. I can't remember exactly, but so much more than Lockheed Martin. And so this is, to me, a positive for Lockheed Martin. And something else that's really good about comparing and contrasting these companies is they mentioned, Lockheed Martin, that on March 11th, there was the American Rescue Plan Act of 2021 that the president signed. And so they don't expect to make a pension contribution in 2021. That will be pretty amazing. That means there's pretty much another $1.2 billion on the books for Lockheed Martin for the next year. That is, phenomenal. And the question would be, would Northrop Grumman get away a similar amount? Will they pay anyway, but, thereby make future years, not as intense, right? So if they pay, let's say let's say they didn't have to pay anything this year, and instead they pay $1 billion. Well, the next year, instead of having to go back to 1.8 billion, maybe they'll go back to 1.2 billion. So that would be nice. That would smooth that out for Northrop Grumman as well. Possibly. I don't know if all of this will affect them in the same way, but there's a part of me that just assumes so that these, that they're extending and enhancing interest rate stabilization, restarting and extending funding shortfalls, lots of other stimulus measures they mention. But pretty much for them, at the end of the day, would lower their minimum funding requirements, and also they would stabilize interest rates. So, that to me is a pretty good sign. They mention that they are going to obviously take that lower fund amount and immediately, but in terms of interest rate stabilization, they might be waiting until 2022 to really take advantage of that. I don't know why. I suppose maybe they think that rates will remain really low right now. I'm not an expert at this, but they expect to recover, $2.1 billion of pension costs in 2021. So, that's pretty good. To me, I had thought that it was 1.2 billion in the previous slide. I'm not entirely sure exactly what's going on, but they mentioned that they assumed that they'd have $1 billion discretionary payment. So I'm not entirely sure about the exact figures that are involved in comparing the retirement plans to Northrop Grumman. But the point is, even if it was $2.1 billion, and even if that is a little bit more than Northrop Grumman, but we're going to see later that Lockheed Martin makes an enormous amount more money. And so even if they had similar pension sizes, that's a positive for Lockheed Martin. And also there's a positive that they look like they are not going to be paying whatever that is, $1 billion in the next year. So, from my perspective, I would actually think you would possibly want to pay that off. And thereby, make that funding a lot easier in future years to meet it, right? But we'll see exactly what they do. They've obviously calculated this out. They've obviously figured this out, and maybe they have more important things to do with that $1 billion, like buying Aerojet Rocketdyne. I have no idea. Now, when we're looking at their net sales, first of all, I want to point out that in terms of the rotary emission systems, that went up $400 million. And yet, when we're looking at, their operating profit, it only went up $40 million. So that's kind of the culprit. And sadly, space had gone down in terms of operating profit, even though it went up in terms of sales. So that's not a great sign. We saw kind of the opposite happen with Northrop Grumman. So I'm not sure what's going on here exactly, right? Northrop Grumman had a better, I believe, if memory serves correctly, they had even a pretty nice operating margin on space. It didn't go down like it has for Lockheed Martin. Now, if we look at the net sales, you can see that a huge chunk of that is the aeronautics sector. That's 6 billion, 6.3 billion, 6.4 billion. And, their total net sales in this quarter was only 16 billion. So, I should say only. So that's more than a third of their sales are coming specifically for aeronautics. So let's just talk about that really quickly. So they have the F35 program, which also represents about 30% of that 30% of their sales. So that is a huge chunk of their sales, at least for this quarter, I suppose. But I assume regularly, you're talking about maybe, according to that, just over $2 billion of their revenue. So of the 16 billion. So that's 10%, 15%, whatever it is, of their revenue is from F-35, which is pretty large. Although when you consider how much the money and how much money is spent on F-35 programs, I suppose I'm amazed it's not more of their revenue. But nevertheless, they mentioned that they had some serious delays from their suppliers for the F-35, and so pretty much they tapered their production rate in 2020. They think they'll have it back on 2021, which is a good sign, but there's going to be still some issues when it comes to COVID-19, and that will, cause some issues for them. They also mentioned the fact that if the Chinese country puts sanctions on some of their suppliers, that might affect their F-35B. Also, the government pretty much put sanctions on Turkey and removed them from the F-35 program, and there's also the potential that the government might stop Saudi Arabia or the United Arab Emirates from buying these F-35s. So, there's obviously some political points here that, will affect Lockheed Martin at the end of the day. But Lockheed Martin, as sure as everyone knows, if they've heard about the F-35 program, right, they make more money in terms of profit because the more people who buy the plane, the more that they can, gain from the law of large numbers in terms of producing a lot more planes. So that will improve their operating margin. It improves the price of the plane, I suppose. So, these potential sanctions don't just affect, they make fewer planes. It also, the scale, the ability for them to scale production and make money off of that also gets affected. Now, they mention when it comes to aeronautics, a nice thing, which is they expect that the operating profit margin for 2021 is expected to be slightly higher. Not only that, but they expect their sales to increase in the mid-single digit percentage. And maybe that's because they know that they had to taper some of their production, or they know they have certain contracts coming. I'm not entirely sure. Now, when it comes to missiles and fire control, you can see their operating profit was pretty much the exact same from year to year, but their operating margin went down because even though they made more sales, sadly, that operating margin went down. So that's not a great sign. But they do mention here that their sales, they expect to increase from the 2020 numbers. I don't know what this is, but it's specifically from the PAC-3. I don't know. I'm not in the know with these types of things, but in case you are, that's where they expect to get some more sales. And the profit margin for 2021 is sadly going to be lower. So they might make even less profit, even though they're going to have even more sales. So not a great sign, I suppose, but we'll have to see what happens. Now, in terms of rotary emission systems, they're talking about they got a higher net sales because $290 million for training and logistics solutions programs. And, they had $170 million from Sikorsky helicopter program, so that's always nice. And in terms of, they had a $15 million for Sikorsky helicopter programs due to increased volume. So like I said, just from the volume increase, they can make money. That's always a really nice positive. And they expect that their net sales to increase into the low to mid single digit percentage. So not a lot, but not a small amount, and their profit margin is supposed to be in line pretty much, which is, that's nice. You don't want it to be worse. It would always be nice for it to increase, but you don't want it to be worse. In terms of space, they mentioned that here you can see their operating margin went down substantially. Now they expect that their net sales are going to increase. However, even with their profit margin down, they expect it to be even lower in the next year compared to 2020. And obviously, because of that, their operating profit is going to decrease. So not a good thing in terms of space for Lockheed Martin. I'm not sure if this factors into the Aerojet Rocketdyne acquisition. I don't know if that's part of this or not. But to me, it's, that's not a good sign. This was a really positive selling point for Northrop Grumman. And I still think in the long term, it's good for Lockheed Martin. But, for Northrop Grumman, it's good in the short term as far as we saw in terms of the numbers. So, to me, that's not great. Now, in terms of share buyback, so they have apparently $2 billion where they can buy more shares. So that's, positive. Okay, so let's talk about the conclusions in terms of Lockheed Martin. So just kind of looking at their graph, just the technicals, I don't have too much to say. Obviously you can see that there was this huge run up, March to May. It went up quite fast, then it came down. And then when Northrop Grumman earnings came out, and those were really positive, Lockheed Martin, you can see here, came right back up. Now, what's interesting here is the 50-day moving average has passed the 200-day moving average. And so that cross is kind of seen as a really positive indicator for a lot of people. They look at that and say, oh, wow, there's a lot of potential here of this continuing to keep going higher up. Now, to be fair, though, it happened over here, and the stock did not go higher up. And if we look at the trend indicator, this is not a great sign, in my opinion. However, you can see that red line was the trend indicator. And you can see, if you look at the chart above, that trend was showing really strong. And it continued going up and up and up. And now it's the stock has kind of plateaued or flattened. And so the trend indicator is coming back down. And in theory, what you might see is it might come back down below 20. And if we're going to have another run in the positive direction, I'm not saying we are, but if we are, that's kind of what you'll see. This is kind of the setup for another run, in my opinion, if it's going to happen. Now, to me, let's keep talking about what's going on before I give you the exact technical in time, because I'm not entirely sure, because you can see a huge run up. We're talking about it was at $320 and it went up to almost $400. So that's like a 30% increase. And so there might be a lot of people who are happy to sell out from, who bought that stock all the way up. On the other hand, if you look at the far left of the graph, it's obviously within the year being at much higher levels. So it's a little bit hard for me to say that this is overbought at the moment. The CCI indicator is not showing like a sharp overbought, but we definitely don't have a trend in the positive direction yet. Now, what I thought was pretty interesting, and as we're just wrapping up, just some specific technology, I guess, that Lockheed Martin has. They have a tanker drone for the Navy. So pretty much these planes, these F35Bs, or I suppose any plane, I'd hope, pretty much the Navy can send out a drone with oil, with fuel, and refuel a plane, which is pretty neat, right? That means you have fewer personnel. You could, in theory, have more refueling, lower risk to personnel. So that I thought was really neat. But also what's really neat when you think about it is they're building not only the F-35B, or F-35 I should say, but they're building a lot of support vehicles around it. And so if these planes are going to be in commission, even if they don't get replaced, well, what about these drones? What about these auxiliary kind of technology that the Navy can take advantage, that other countries can take advantage? So I think this is actually kind of neat. It's almost like, you came to our store to buy this one thing. Well, let's upsell you to another product that is really amazing. So I think to me, I think that's actually pretty interesting. Now, they also mention these, this pretty much, it's a high-powered microwave, but it's a drone that delivers these high-powered microwaves, so to knock out, I suppose, other drones. So I thought that was pretty interesting. Now, a lot of the drones that they mention, for example, they do long-endurance imaging, so they're almost reconnaissance drones. Although this X-44, I couldn't really find a lot of information about it, and I don't know if that means that, it's just a platform for unmanned aerial vehicles, or if it does something a little bit more than that, and they just don't want to share that information. But, you can see over here, they do mention that they have a drone that's used for artillery targeting. And, once again, this drone for a lot of surveillance. So, I'm not seeing this mention of, drones for use in war. And I'm just curious about that. When it comes to the F-35, is that because their main bread and butter is using a pilot? Or is it because that's classified information? They can't tell other countries or other groups necessarily that they have these drones that are going to be capable of working with the F-35, right? That's what I'm wondering. Just like we saw that drone that would refuel the F-35, well, what about if you had a drone that helped not just do surveillance? That's obviously what they're doing here. And so that would increase the F-35's range of missile attack because they could have drones kind of scouting much further out in front. But what about if, imagine there was a dogfight and the F-35 had other drones that with it could engage the enemy? That's pretty interesting. That would be kind of like that upsell kind of technology. It would make the F-35 a whole different type of fighter, right? It would be like a fleet almost. And I could see that totally being possible. Obviously, I don't see anything here. I don't know, sadly or luckily, I'm not, but it's just an interesting note, and maybe it's just because it's classified. If you know anything about that type of thing, please leave a comment. I'd find that interesting. But let's look at Northrop Grumman now and Lockheed Martin and try and compare and contrast. So Lockheed Martin, you can see there's been consistent growth in revenue, which is pretty good, but up to $65 billion. And what's interesting is when you look at Northrop Grumman, that chart looks awfully similar. Now, in terms of the numbers, Northrop Grumman is doing a lot less revenue, right? They're only doing $36 billion, which is, almost half. Not quite, but nevertheless, it's interesting to just look at the patterns of the chart in terms of revenue. Is that just government spending, Okay, when we're talking about operating income, Lockheed Martin makes about it looks like $8.5 billion, right? It's continually going up, which is pretty nice. In terms of Northrop Grumman, right, they're making a little bit over half, which kind of makes sense. That these two companies are kind of comparable, except that Lockheed Martin looks to be twice as big. So twice as much as revenue, twice as much of operating income. When it comes to current liabilities, meaning pretty much debts that they're going to have to pay off this year, or at least roll over by borrowing more money for the next year. So we're talking about $14 billion over there, and Northrop Grumman has a little over $9 billion. So, in terms of the revenue, one was half. Well, this is not quite half, right? You'd want to see Northrop Grumman at a much lower liability like $7 billion, but not that different, I suppose. Now, will Lockheed Martin, have to borrow that extra $2 billion or whatever it might be, $3 billion to pay for Aerojet Rocketdyne, in which case, Northrop Grumman is kind of looking back into that 50% range. So that would be interesting. So maybe we're just looking at this a little too early, this part of the graph. But nevertheless, obviously a lot more debt for Lockheed Martin. And in terms of total current assets, so pretty much if they could these are things that should in theory be readily saleable within a year. It's $19 billion, which is more than their current liabilities, which is always a good sign, right? They have a lot more money and things they could sell to pay off what they have to owe that year. In terms of Northrop Grumman, similar situation. In fact, Northrop Grumman has an enormous amount more of current assets, relatively speaking, of course, right? They have $15 billion, right? Remember we said that Lockheed Martin was almost twice the size, and yet Northrop Grumman has almost, just as much of current assets. So that is a great sign for Northrop Grumman in this case. Now, in terms of Lockheed Martin, total long-term liabilities, right, we're talking about $30 billion. We look at Northrop Grumman, it's kind of close, which is not great, right? That to me is just not a positive thing when it comes to Northrop Grumman. Now, once again, Aerojet Rocketdyne might increase that liability for Lockheed Martin. Now, when we're talking about total liabilities, so you add up everything that we just discussed, right? So we're at $45 billion for Lockheed Martin, and for Northrop Grumman, just over $30 billion. So not half as much as Lockheed Martin, but that's pretty good in my estimation, especially when you think about the fact that almost 90% or maybe more, 90%, almost 50% of Northrop Grumman's liabilities, they could pay off this year if they wanted to. Whereas that's obviously not true for Lockheed Martin, right? Their total current assets maybe is not quite half, right? So when we're looking at the total market capitalization, right, if you want to buy the company, I suppose, that's what we're looking at here, in terms of billions of dollars, well, it makes sense, right? That Lockheed Martin is at, around 110 billion, and Northrop Grumman right now is around 60 billion, right? So that's almost like a 50% difference. So that, to me, makes a lot of sense that in terms of everything you're looking at in terms of prices of the company. And once again, look at these kind of shapes of the graph. Now, one thing I will say is you can see, well, I don't know, they look pretty similar. On the far left, you have that kind of bump, then it comes down. Although Northrop Grumman seems like it's doing a little bit better in terms of the price action, right? It went a little bit further before dipping down, and it's back up to where it was. But, not a big difference. They probably both have trends. And that might mean that Lockheed Martin, you have a luckier, not a luckier, but a better shot, I suppose, if it's going to follow Northrop Grumman's kind of trajectory. I'm not saying that's going to happen, though. Now, in terms of the EV to EBITDA, now, we did a video about this. You should watch it. Very important. But you can see Lockheed Martin, at least, I think this is from Guru Focus. I don't really remember. I don't really use them that much, but nevertheless, they mention over here that it's 11.28 for Lockheed Martin, which is pretty good compared to the industry, which is around 15.5. Nevertheless, when it comes to Northrop Grumman, you have a much better, it's 2 points lower, 9.28. Now, I don't know exactly how this number is calculated, but presumably we're talking about the cost of buying the company, the amount of total liabilities that they're going to have, and of course, how much operating income do they make. So, just from looking at that from the past year, it looks a lot more positive for Lockheed Martin. For Northrop Grumman, I apologize. The one thing I will say is Northrop Grumman had that major issue with paying off retirement benefit plans. I don't really know what they're going to do about that. But Lockheed Martin telling us that this new act that the president signed is going to help them with their post-retirement benefit plans, maybe that will also really help Northrop Grumman. And so that would be a really positive sign to me in terms of investing in Northrop Grumman. Now, maybe you want to invest in both of them. One thing I will say in terms of, for both sides of this, we see that Northrop Grumman has a section where they actually, it looks like to me, they actually build, not just design, but also can manufacture microelectronics. Well, if you read the news, you can see that there's a shortage and there's problems. So this might be a big positive for Northrop Grumman if they want to expand. They had a meeting amongst other companies with the president. I don't know if this is going to go anywhere because their processes for making their chips might be very different than other types of chips. But nevertheless, in my perspective, this is something that they could expand, this business. And to me, this would be a really nice thing. In terms of cyber, preventing cyber attacks, their CEO, I believe, has involved in information technology. And so this, to me, is another really amazing positive. Sadly, they sold this sector, right? And cybersecurity is such an amazing thing right now. It's getting so many eyeballs on this. And I wonder if they'll make a new cyber sector or something along those lines. I have no idea. I don't know why they cut it out. Maybe it's just too many sectors. I really have no idea. But to me, this was, I thought, going to be a really nice positive until I realized they sold it. Now, this was an interesting one. Now, we mentioned when we did Northrop Grumman, they really keep selling themselves as a defense contractor. But here, they're mentioning that they make munitions for the, I think it's the M4, I don't know, I'm really bad at this, but the Abrams tank. And this shell is going to be multi-purpose. And so, whether it has to have a delayed fuse or it's going to explode in the air or it's, a regular ammunition tank, so round. So, there might have been 4 different types of rounds or however many they might be that the government had to pretty much stockpile. Well, now, pretty much Northrop Grumman came up with a way of pretty much including them all in just one tank shell. So the government just buys one and they can do any type of function. Now, the question I have is that one going to cost more than each individual shell? Meaning, maybe the government is going to think, well, I could pay a little bit more and have a multifunctional shell. However, maybe I'll just spend more. I'll buy more of these and I'll buy them in the right quantities and, I'll save money. I have no idea. But I did think that the technology was pretty interesting. Also, they came up with something called a very lightweight torpedo, which I think is even smaller. They claim it's a defensive missile. I'm not sure how a torpedo is defensive, but okay. Like I said, they brand themselves as a defensive company, I think. And maybe it is. I have no idea. I know the slightest nothing about this area. Nevertheless, as far as I understand, going to be a smaller torpedo, so they can store a lot more on the submarine. And in the future, presumably submarines will be able to have smaller missile or torpedo tubes to launch these, so that they could have more, torpedoes being able to be launched. And these can be launched from helicopters, things like that. So this is something that is, I think, as far as I understand, much cheaper, and you get a lot more of them. And so this might be very appealing to the Navy. These are the types of things that are really interesting, new technologies that I think, these companies are, I almost look at them as a little bit more stable, but still growth companies. And maybe that's not good because we all want peace, but nevertheless, these companies are growing and doing a lot more. In terms of Lockheed Martin, they have these precision strike missile systems, and their skunk works. It does a lot of interesting things. One thing that I thought was really interesting, and get this behind the scenes, I suppose, is when they used to have to build, their airplanes, they would build the material and then they'd have to have someone drill the holes. Well, now they figured out a way to get the holes in the material pre-drilled, so that will speed up their manufacturing, and that to me is amazing. But also, it'll change the way that they have to buy parts and organize them, connect them, and how they all get built. And I don't know what the big deal here is, but obviously, if they couldn't do this before and now they can, that is a big deal. And I wouldn't be surprised if this has to do with the stealth technology or some other issue going on in terms of, the paints and the types of materials that they have to do, and, coverage and all these different things. I don't, once again, pretend to be any type of expert, but to me, this would be a big deal. Okay, so when it's going to come down to it in terms of investing, they're both companies seem to be very similar in terms of trajectory, in terms of direction. So kind of if you're investing in the sector, there's a part of me that would almost think you could easily invest in both of these and be okay. However, that being said, this is going to be hinging a little bit on the F35 program. Do you think that this is going to be a really positive program or not a positive program? Is it going to be expanding, or is it kind of on the downward direction, right? Because this is, as we discussed, aeronautics is 30% of pretty much their revenue, and the F-35 is 30% of that. So you're talking about 10% of their whole revenue possibly ending. Now, maybe they'll get the contract for the next plane, maybe, but maybe not. It's hard to know with these types of things. So the F-35 program is a pretty important part of Lockheed Martin, I think. It's obviously only 10%, so it's not the most important, but it's obviously important. In terms of Northrop Grumman, they're really expanding into space. They have a good profit margin. I think that's really positive. Lockheed Martin also expanding into the space area, also really positive. However, their profit margin seems to be going down in that area, right? The next year, they don't expect to be doing as well in that area. So to me, I think there's a little bit more growth potential in terms of Northrop Grumman. In terms of Lockheed Martin, they almost have all of these contracts, and they're kind of just upselling and building them and improving them. That's kind of the way I'm looking at them. And so, yes, they also have the growth potential in terms of the space area, but they're not there yet, as far as I can tell. They're really trying to get there. They're really pushing there. And the only other thing that I would mention in terms of difference is just the liability. So for me right now, I'm kind of leaning towards Northrop Grumman. Unless you really want something a little bit more stable, the F-35 might add to that stability, right? It's the fighter or the jet of choice. It's what countries are looking to buy if they can afford it, although the price range is getting a little away from some countries, sadly. So, you're kind of looking at both of those things. But still, I'm leaning a little bit more towards Northrop Grumman in general. Not advice, obviously, just educational purposes. What would I do, I suppose? And, the only other thing I'll mention is, obviously, Lockheed Martin has a lot more debt, and if interest rates go up, that's not going to be good for Lockheed Martin, obviously. That's going to make paying off that debt a lot harder as they renew those debt contracts. Now, on the other hand, if inflation goes up, right, that's going to be a lot better for Lockheed Martin because they have all this money that they pretty much borrowed, invested, and yet at the end of the day, it's going to cost them much less to pay back that debt. So that could be a pretty interesting positive. But of course, if inflation goes up, in theory, the Federal Reserve is supposed to increase interest rates. So, from that perspective, Lockheed Martin makes me also a little bit more nervous compared to Northrop Grumman. And the one thing that Northrop Grumman bothered me about was the pension plan. But this sounds like there's a possible new development that the pension plan will actually be quite good for Northrop Grumman. Now, there's been a lot of heat buying into this area right now, into this sector. I don't know if it's the end of everyone buying and all of this push into this sector, or if it's the end or just the beginning, or what's going on. For me, I almost feel like it might settle down. But of course, like I said before, looking at that chart, if there starts to be a trend in the positive direction again, once it's kind of settled down for a while, right? It has already settled down. So if it starts trending in the positive direction, it might be a good time to buy, just because it might continue going up, and you don't have to buy your full amount. You could just buy, like a small amount and, see what happens. And if it just, the price gets away from you, well, okay, so you made a profit on a small amount, not the end of the world. But if it comes back down, you'll have a chance, and this will be a good way, to put your toe in the water. You'll be able to watch the stock, see kind of what's happening on a monthly basis. I'm not saying you should check it every day, obviously. But also with things heating up, tensions in the Middle East, hopefully those will die down. But you have tensions between China and Taiwan. You have tensions with Russia. You have tensions with Iran. So this is a pretty interesting sector when everything's going on, especially when the president seems to not be signing a smaller defense bill, and these companies all kind of sell themselves as defense contractors. Although I don't see that as being entirely true. So that's kind of my opinion. You tell me which one would you invest in, Northrop Grumman or Lockheed Martin? I kind of don't know. They're kind of both good, but I'm kind of leaning towards Northrop Grumman sometime. Thanks for watching. Please comment and subscribe. I really would love to know what you guys think.